We heard those comments from Gensler yesterday. He says payment for order flow, the back-end payment brokerages receive for directing client trades to market makers has a, quote, inherent conflict of interest. Your response?
Well, I think that's right, Seema. Look, this is a practice that's been around for a very long period of time. And every once in a while, it gets, renewed scrutiny or renewed focus. I think Robinhood came out with its business model and basically said payment for order flow would be its primary revenue driver, and that's what they were going to rely on going forward. So you have individuals looking into this again. You might recall back in 2014, I think it was, when Flash Boys came out, there was some focus around payment for order flow and what was happening in the system. But this is all part of the market structure and what sits behind the amazing execution quality, the speed with which trades are executed, the enhanced receipt of what's known as price improvement by the retail trader. So this is part of a bigger system that really would need to be looked at if there was going to be some kind of a ban or something to just pull that one lever of stopping payment for order flow.
How big of a threat could this be for Robinhood's business? I mean, shares are down about 10% over the past week. Clearly, investors are taking notice.
So it's interesting, actually, with Robinhood and what's gone on. They've proved to be extremely resilient, right? They've faced a number of bumps in the road along the way. They've had their capital issues. They had some issues with, claiming some SIPC insurance and some protection around some accounts that they had put in. Each time they've bounced back, and I think each time they've gotten a little bit smarter and a little bit stronger going forward. So would this be a hit to their business model? Of course it would. It's their primary revenue source. I think, last time it accounted for about 80% of their overall revenues. So this could be a big hit to their bottom line, but the entire industry has relied on or otherwise received payment for order flow as part of the current market structure and the current rules of the road, if you will, for the past, numbers of years. So this would be something the entire market would have to adopt to and sort of make their changes, whether that be through a subscription model, a tip model, right? There are a lot of different ways to, continue to drive revenue. I just think that this current structure actually has provided the retail trader, the retail investor, with the best execution quality they've ever received.
To Robinhood's credit, it's done a great job at getting more millennials to trade, right? That seems to be its primary user base. At the same time, there's talk about PayPal potentially entering stock trading. How big of a threat could this be? How do you see this sort of story playing out?
With my new hat in terms of Lefteris and the SPAC that we've been looking at a number of really great fintechs, and we've seen a lot of new market entrants actually into the brokerage space or related into the brokerage space and providing those services to consumers or new market entrants who are learning how to invest or to trade. So I do anticipate continued competition, continued consolidation in this industry in particular. With PayPal, anytime you have the big gorilla in the room come to trade or come to bear into your market, you have to open your eyes and take a look. But PayPal would need to prove itself as, a market participant or someone who can actually drive retail trades through its otherwise payment platform, right? So I think Robinhood has already proved itself as just an acquisition machine, right? Client acquisition machine, what they've been able to do to grow their customer base. Now they need to figure out how to monetize that customer base. PayPal is looking at it as more of a diversification of revenue streams and providing additional financial services to its customers now. So I actually think PayPal is the one that's going to have to prove that they can convert their user base and have their user base look at them for retail trading. Robinhood already has that. So I don't, you're going to see continued competition. I don't think PayPal is going to be the sort of death knell of Robinhood, if you will. But they're going to have to, keep a watchful eye on the new market entrant for sure.
Although you could look at PayPal's success with Bitcoin and developing that Bitcoin platform and say, well, maybe you can do the same thing with stocks. PayPal now a $340 billion company. Carl, really good to see you this morning. Thanks for your thoughts today. Carl Rosner.